Joseph, if I start with you, what do you think of this EPS? I guess another profitable quarter, but less so than people would have hoped for.
Yeah, I think that's true. They're operating basically at break-even at the moment, which shouldn't surprise anyone. But what matters here is that they're generating profits and they are generating cash. That's been the big knock on the company. And, if you look at the results as well as the outlook, I think the liquidity and viability concerns really don't hold up at this point.
I mean, one of the biggest bearish cases lately, Gabe, has been whether Tesla has a demand problem. Do you see evidence of that?
Yes, I believe that Q4 was the best it will ever get for Tesla. Specifically, if you look at their guidance, they guided for a midpoint of 280,000 Model 3s in 2019. That was about 20% below the street consensus of 330, which is also what my friend Joseph has in his estimates. Finally, I would add that I believe demand for all Teslas fell off of a cliff starting January 1st because of the partial tax credit expiry of $3,750. Nobody wanted to buy a car and have to pay almost $4,000 more. There are pictures of lots all over from coast to coast filled with Tesla inventory.
Joseph, is that a fear for you? And will you be looking for guidance from the company on the earnings call on that particular point?
Well, I think, to be fair, Gabe has a bit of a flair for the dramatic, although it is absolutely true, and we wrote this morning that the mix is shifting from the more expensive cars, the S's and the X's, to the 3s. And I think if you look at the total unit number for the year and you dig into that, you discover that there are a whole lot more Model 3s there. Maybe it's going to be 280, maybe it's going to be 300, but that's a vast increase off of where the company was this year. So I think to talk about demand evaporating is a little dramatic, but it is fair to say that in particular for the expensive cars, the demand has softened up a lot. And also Tesla's taken the cheaper version of those cars out.
Gabe, the question of the balance sheet, at least in the near term, has that been alleviated a little bit? I mean, obviously with the cash on hand, they have this maturity coming up. And I do know that they made the quarterly earnings this time with a large decline in capital expenditures, it seems. How does that fit into the whole picture?
Well, their capital expenditures were clearly unsustainable. In fact, they were more than 150 million greater than their depreciation. But Tesla's reduced guidance for 2019, I believe, is still unrealistic. They sold about 63,000 Model 3s in the fourth quarter. And since I believe demand is lower in the first quarter and going forward due to the expiration of that federal tax credit, I believe they'll be lucky to sell closer to 200,000 for the year or 50,000 a quarter rather than the 70 to 80,000 that others are expecting. If you run that math through the model, Tesla will be burning once again billions of dollars in cash rather than generating any cash.
It's amazing. You can have one report and such different opinions about what the numbers are showing.